Okay guys, good afternoon on this sweltering Sunday, where we are now going to look at again our weekly forecast for the TVT 2.0 forecast group. These videos have been going out on a regular basis, but now they are actually, as we said last week, showing exactly what we look for in terms of institutional order flow, imbalance levels, key levels, and the like to determine areas of interest and points where we want to kind of see the market react. So what we will do is we'll do a top-down analysis as we normally do, and then factor that into our lower time frame analysis. So what we can see at the moment is that the market on the weekly time frame has obviously continued bearish. It's come back, it's bounced, it's come back, and it's actually tapped into a weekly level of demand, which was left behind tail end of a couple of weeks ago. It wasn't mitigated fully to the 50%, but it now has been tapped 50%. So effectively, this level now for us is an area of bullish bias. We want to see the market reject out of this zone and go bullish. So when we look at supply and demand on this basis, we can see the weekly demand is this candle. These are all-time lows for GU, which was COVID. The market has not been lower than that since recording has occurred. And what we're now looking at is where can the market react off, and what we're looking at in terms of interim levels for supply and demand to either buy up to sell down deeper to mitigate inefficient wicks down here, or to then obviously buy up and target liquidity above. So when we turn on our supply and demand zones on this time frame, we can see that we then have the demand sitting down here on the lower time frame and a larger demand down the bottom for the buys out of the inefficient wicks that were created at a price down the bottom here. Now those are daily zones. The weekly obviously is slightly different, but effectively we can see that we're sitting right above demand, and that's what the market has rejected out of at the moment after taking the 50%, and it's bought up out of those zones. When we come down to lower time frame supply, we can then see obviously we would term supply in this area here, where the market then sold down and took lows, and then at a higher point up here we've got supply up here, which obviously then broke down and took these lows here as well as these lows. So there are a couple of areas of interest which we have refined down on the lower time frame here. We'll now drop down onto the daily and see exactly what it is that we're looking at. So where the market has come down and taken the 50%, it's bounced off that already Thursday, Friday. Very nice textbook actually set up for GU this week, where we had the buy early week, reversal midweek, and then retracement. So we're now looking for areas to target above. So we've marked out supply, where we kind of see it sitting on the higher, on the lower time frame, and then areas of liquidity that could also be targeted. Now, many of these levels, as we know, have been left on the chart from a while ago because they have not been mitigated, and they are still considered areas of interest. When we then drop down and we start turning on our key levels, we can see that it goes a bit crazy, but we'll drop it down. So as I said, all of this are levels that we had marked up from earlier on in the weeks and months past that have not been mitigated, so they are still left on the charts as an area of interest. However, when we drop down onto the 4-hour time frame, we can now see that within close region of where we'll be looking at the market at the moment, we've got a 76.0 and bullish imbalance that is at the top of this wick here, which actually was, to my understanding, a sell limit order being triggered under this fair value gap to hold price at this level, which kind of drew down this bullish retracement that occurred here. We can see it was stopped out with this bearish imbalance, which is shown as a bullish imbalance. So effectively, sell stops triggered here, and then the market actually sold down from that, respected a bullish imbalance that sits down the bottom here, which again could have been a buy limit, which then reversed it back. So at the moment, we're sitting in the middle of two areas of consolidation and liquidity on both sides. When we drop that down into the 1 hour again, we can then see exactly what's happened here. So we have an inefficient wick, indecision candle that was formed possibly out of news. I can't remember because I didn't trade on the Friday. So effectively that would have been NFP, I believe. And the market then left behind an area of demand, which it bought out of, tapped into supply at the top, did not take the 76.0 bearish imbalance, and has now consolidated to the rest of the day. So a daily POC level is sitting here. We've got a bearish imbalance sitting above us. We've got a bullish imbalance here that was mitigated on trading view but does not show as being mitigated on MT4. So again, be very careful about how you mark your levels, because sometimes the level that you'll see on MT4 will show it as not being mitigated, and TradingView will show it as being mitigated, and vice versa. It can happen the other way around as well. So this level stays on the chart because it is a bearish imbalance, but we believe it's a buy limit, which has now been taken, and it's pushed the market back up. We've got another level below us. So in terms of recent price action that we'll be looking to do, we'll be looking to see how the market respects this supply, how it respects the bearish imbalance that's been formed here as a sell order, which clearly dropped the market down lower, took all of these interim lows here, and then obviously tapped into an area of liquidity here, which was the demand that caused the buyout here. And we can see that very clear relationship occurring where from supply to demand and then back up again. So we'd want to see how the market reacts to this, and if it does, then we want to see how it kind of sits up on the daily POC and whether it buys up higher. So effectively, we could be seeing something like this, back up into supply higher up. There is a level of POC here which has been taken, but I haven't taken it off the charts because again, it could be relevant. Area of supply here that previously formulated, which we can actually delete off the chart. We've got a higher level up top, and then this is interim supply on the daily forecast that we did during the week last week, which has not been tapped as well. So again, an area of interest on the lower time frame. We'd be looking for a buy up Asia to then sell down, and then target buys out of this zone to kind of possibly take this imbalance, because interim structure has been taken. We've had a push down, market has come back up, it's broken interim structure, taken these lower highs, and then created a higher high up here. So it could be a shift in market pattern, has come out of demand on the higher time frame. So again, it could be a short interim impulse buy. Have a look at this, make sure you understand it, but I'll put the markups on my Instagram as well, and hopefully it's now starting to make sense in terms of where the market comes, respects and reacts out of are all institutional levels. They are all areas of high volume trades, imbalance zones that we see on the institutional footprint chart, where high volume orders have gone in through institutions to hold price at a certain level, and it doesn't need to be a long-term hold. This is an interim hold. It can be over in a few hours, as we've seen. Our trades are usually factored in for about an hour to 2 max, and we end up clearing our 3, 5, 10 hour profits. So I hope this has been enlightening. I hope the course is doing well for you guys, and as with everything, if there are any questions, queries, comments, please do drop them into the social media links for both myself as well as the volume traders. And hopefully we'll get back to you guys with any queries and comments that you have. Okay, take care, trade safe, enjoy the rest of the week and weekend, and I'll be back on the charts on Tuesday.